Hello friends, today I am coming with a new video on ratio analysis because for BBA first semester they added new syllabus. Under that they taken here now ratio analysis and financial statement analysis. Now we are going to study first ratio analysis. So here they given one question. I taken one question here now. They given here now balance sheet. The following is the balance sheet of a company as on 31st March, and here they given liabilities and assets, and they ask to calculate here now current ratio, quick ratio, inventory to working capital, debt to equity ratio, proprietary ratio, capital gearing ratio, and last one current asset to fixed assets. So here we need to understand here now. So one by one here now. First one here now we are going to understand here now. So what is the current assets? First we need to understand here now what are the current assets. So here stock is a called as here now current asset. Sundry debtors is called as a current asset. Bills receivable is called as a current asset, and bank is called as a current assets. Okay, total of these one here now taken as here now current assets, that is 2 lakh plus 1 lakh 3 lakh, 3 lakh plus 10,000 3 lakh 10,000 plus 40,000 3 lakh 50,000. Okay, so current assets comes how much here now? Current assets are here now 3 lakh 50,000. Next we need to come to we need to understand here now what are the current liabilities. What are the current liabilities given under the liability side? So here sundry creditors and bills payable, these are two are called as here now current liabilities. So what is the current liabilities total here? 1 lakh plus 50,000. Total is 1 lakh 50,000. 1 lakh 50,000 is the total of current liabilities. So now they calculated here now current ratio. The current ratio formula is here now current assets divided by current liabilities. Now here current assets we calculated just now here now 3,50,000, and current liabilities are here now 1,50,000. The ratio is 2.33 is to 1. The current ratio is how much here now? 2.33 is to 1 is called as here now the ratio of current ratio. Next one they asked in a question here now calculate quick ratio. Okay, so what is the difference between current ratio and quick ratio here now? Okay, so in current ratio, in current assets, if you are not taking into consideration stock, then it is called as here now quick assets. Only you have to consider here now debtors, bills receivable, and cash at bank. These are only three. These are only three here now taken as here now quick assets. These are called as here now quick assets. Okay, these are called as here now quick assets. What are the quick assets here now? Sundry debtors, bills receivable, cash at bank. Okay, anything you are going to convert immediately as a cash or comes under quick assets, because stock will be not considered. Sometimes you need to sell the final product in the market, or else the whatever the raw materials are there. Okay, it's a very tough job to sell in the market. That's why so stock will be not considered as a quick assets. Now what is the total here now? Debtors total is 1 lakh, and bills receivable is 10,000, and cash at bank is 40,000. So quick assets total is 1,50,000. Quick assets total is here now 1,50,000. And again, what are the quick liabilities? So here quick liabilities are here now sundry creditors and bills payable as it is. Okay, there is no change comes under here now. The current liabilities and quick liabilities here. So both are comes under here now, one and same. So we should take, so creditors 1 lakh and bills payable 50,000. Total is 1,50,000. See now here, quick ratio equals to liquid assets divided by liquid liabilities. You can call quick assets or quick liabilities also. Next one, what is the amount here now? 1,50,000 divided by 1,50,000. Okay, it's a 1:1. And what is the standard ratio for quick assets is always here now 1:1. Okay, if standard ratio is 1:1, then your calculated answer is also 1:1. Then you say that here now company is under a control or company is doing better. And current ratio, standard ratio is, for current ratio standard ratio is 2:1. Now here the ratio is 2.33, means here now the company is doing very good job or doing better. Next, third question, inventory to working capital. Next one here now, inventory to working capital. Now what do you mean by inventory? Inventory is nothing but here now stock. Sometimes, okay, stock, this one stock will be taken considered as here now inventory. Stock will be called as here now inventory. Okay, next one, working capital. Working capital equals to current assets minus current liabilities. Okay, working capital equals to what here now? Current assets minus current liabilities. Okay, so what are the current assets here now? See now, current ratio we calculated already here now. Current assets are how much here now? Current assets are 3,50,000 minus current liabilities. Okay, current liabilities are how much here now? 1,50,000. 3,50,000 minus 1,50,000. How much is remaining here now? 2 lakh. 2 lakh will be called as here now working capital. So working capital cost how much here now? Here it is a 2 lakh. That's why. And inventory is how much here now? So inventory is 2 lakh and working capital also here now how much? 2 lakh. Your ratio comes how much here now? Inventory to working capital is here now 1:1. Next one will go for here now debt to equity ratio. Next one here now we should calculate debt to equity ratio. So here, so debt to equity ratio equal to, what is the formula here now? Long term debts divided by shareholders funds. Long term debts divided by, so this one, shareholders funds. Now here we'll understand here now under liabilities what are the long term debts here. Okay, debentures are called as here now long term debt. Okay, everyone understand here now? Okay, debentures. Debentures, 12% debentures are called as here now long term debt here. And what is the amount given here now? Amount is 4,20,000. Next one, shareholders funds. Next one you should understand here now, shareholders funds. Shareholders funds equals to what you have to take here now? You have to take share capital plus profit and loss account plus general reserve. So what is the share capital given here? 2 lakh. What is the profit and loss account? 30,000. What is the general reserve here now? 40,000. Total comes how much here now? 2,70,000. What is the total comes here now? 2,70,000. Now debt to equity ratio how much here now? Your long term debt is how much here now? 4,20,000 and shareholders fund is here now 2,70,000. So answer is here now 1.56:1. And here you can use one more way here now, long term debt divided by shareholders funds plus long term debts. So you are going to get here now 0.6 divided to 1. So that is not required here now, just understand here now debt equity ratio equals to long term debt divided by shareholders funds. Next question, proprietary ratio. Next one here now, proprietary ratio. What is the formula here now? Proprietary ratio here now, shareholders funds divided by total assets. What is a shareholders fund here now? Again you need to understand here now, shareholders funds means share capital plus profit and loss account plus general reserve. What is the total here now? Total is 2,70,000. Total is 2,70,000. So this is called as here now shareholders funds. So this is called here now shareholders funds. Next one, for proprietary ratio, shareholders funds divided by total assets. What is the total assets given here now? Total asset is 8,40,000. Total assets equals to how much here now? 8,40,000. So what is the formula we should apply here now? Debt equity ratio equals to proprietary ratio equals to shareholders fund divided by total assets. What is the shareholders fund here now? It's a 2,70,000 divided by 8,40,000. The answer is 0.32:1. Next one, capital gearing ratio. Next one is here now capital gearing ratio. So here they given here now formula, fixed interest bearing securities divided by equity share capital. Fixed interest bearing securities divided by this one, equity share capital. What are the this one? Okay, fixed interest bearing securities means here now, see the 12% debentures. Okay, irrespective of the profit or loss made by the company, you have to pay the interest to debentures. How much percentage here now? It's a 12%. Irrespective of company making a profit or loss, we have to pay the interest to debenture holders. So this is called as here now fixed bearing securities. What is the amount comes here now? The amount is here now 4,20,000. Next one, equity share capital you should take as here now 2 lakh only. Don't consider here now, it is not a shareholders fund, it's a equity share capital they asked. That's why equity share capital is how much here now? 2 lakh. That's why. So here formula is here now capital gearing ratio equals to fixed interest bearing securities divided by equity share capital. Amount is here now 4,20,000 divided by 2 lakh. The ratio is 2.1:1. Then last one here now current assets to fixed assets ratio. Current assets to fixed assets ratio. Already I told you people here now. So what are the this one? So under this assets are here now. So here stock, debtors, bills receivable and cash at bank are called as here now current assets. Are called as here now current assets. What is the total comes here now? Total is here now 2 lakh plus 1 lakh 3 lakh. 3 lakh plus 10,000 3 lakh 10,000 plus 40,000. Total is 3 lakh 50,000. Is okay, current assets equals to 3 lakh 50,000. Then total assets equals to here now you should take here now 8,40,000. We should take here now 8,40,000. Current assets equal to 3,50,000. Total assets equals to 8,40,000. Okay, so what is the formula here now? Current assets to fixed assets ratio. Sorry, you need to take here a fixed assets ratio. What is the fixed assets here now? So fixed assets are here land and building and plant and machinery. These are only two are called as here now fixed assets. Okay, and asset side land and building, plant and machinery. If they given furniture also called as here now. Okay, fixed assets. What is the total here now? 3 lakh plus 1 lakh. Okay, sorry, 3,50,000 plus 1,40,000. Total is 4,90,000. What is the amount comes here now? 4,90,000. So here what is the calculation? current assets to fixed asset ratio equals to current assets divided by fixed assets, that is 3,50,000 divided by 4,90,000. The ratio is 0.71 is to 1. So here these are the answers here now. So if you required, okay, I'll share the this one, okay, link also in the description, so you can take that link also, and you can solve the sums for your own practice. Okay, now I'll end up the video here, so we'll meet in the next